This podcast is for financial professional use only and is not intended for use with the public. Material is for informational purposes only and is not intended to provide tax, legal, or investment advice. The opinions expressed in this podcast are those of the participants and do not necessarily reflect the views of Ash Brokerage. Welcome to Accumulation to Activation, the podcast that breathes life into your retirement planning strategies. If you're an advisor aiming to elevate your practice, deepen client relationships, and stay ahead of retirement income trends, we'll help you capture the opportunities on your doorstep and increase your impact. Each episode, we'll unpack the forces reshaping our industry, from the $44 trillion generational wealth transfer and the evolution of income planning to behavioral shifts, legislative updates, and breakthrough solutions that redefine financial security. Here are your hosts, Mike McLaughlin and Tim Ash.
Hello, everyone, and welcome back to Accumulation to Activation, where we talk about everything around retirement income planning and the risks of retirement income planning. Today is a special episode because we have a guest with Tim and I. First of all, we always have Tim Ash, the CEO of Ash Brokerage. So, how are you doing today, Tim?
I couldn't be better, McGee, and so excited to have our friend that we affectionately call Shank, Steve Shankerman. Welcome. McGee, back to you.
Yep, Steve, welcome. I can remember Steve's first day on the job at our previous life, and I have enjoyed working with Shank for Steve, correct me, but 27 years or so now.
Probably close to 30. Yeah, we're inching in on 30 probably. So yeah, it's
Yeah, that
great to
means
be
that
on.
we're both pretty old right now, unfortunately. So anyway, so today we want to talk about our annuity performance review. And at last year's national sales meeting, Steve brought to table and to light a great way to position the annuity performance review with clients. And we're going to share that. But before that, I wanted to share some of the statistics for a full 12 months of doing the annual performance review. And we did more than 1,000 cases. So this is not a short-term, small sample size. This is a full year of looking at cases and over 1,000 different cases of varying amounts and varying different maturity dates and issue dates. And so if you were to pull out 100, you're going to get the same numbers. But what I think is top line impressive is that out of all the cases that were presented to us for review, 93% of them had a better outcome, whether that outcome from the client was determined to be, I want more income, or I want a better legacy to my children, or I want better long term care coverage from my annuity. 93% of the time, we were better at the outcome than their previous contract. And our average increase in income was 39%, which is significant. I don't care whether your old contract is $100,000 or $1,000,000. That is life changing, especially when you think in a high inflation world, and also the fact that we're staring down a 27% decrease in Social Security as it's planned right now in just 7 years. And our average rate of return on all contracts, fixed and fixed indexed and variable annuities after fees was 3.9%. And so, Tim, you and I talk about this all the time. How much risk should a person take to get 3.9%?
We have talked about this, and thank you for sharing the statistics. And this is, as you said, not a small sampling size. We did 1,000 contract reviews, and 93% of the time we helped people improve, which is what you said. I do want to add on the income side, Mike, as you know, and Steve, most of the variable annuity contracts pay on a single life. We were not only able to improve on single life, But in the majority of the cases, we were able to add a joint life and increase income. So to me, it's an even bigger success story. And the objectives that we have for 2026 and beyond will be to do a lot more than 1,000 of these. And what the goal behind it is to say, what are you trying to accomplish? And help the advisor have that conversation and navigate it and do it through technology, do it through a repeatable process, do it through one that's compliant and one that's going to really have you shine and stand out in front of your clients and get more referrals. And at the end of the day, that is, last time I checked, you grow your business through referrals. You get referrals by helping people.
Yeah, Paul Kingsman is always talking and latching onto my social media about like how great would this be to deliver a 40% increase, and how many of those clients are going to tell their friends about the advisor. So great, great point there. Steve, you are always great at storytelling to begin with, but you shared a way to get into this conversation because there seems to be a little bit of a reluctance about going back and replacing something that I sold 5 or 6 years ago, but it's a different environment. And that's really key to get advisors to understand how much of a different environment it is and put it in perspective. So, why don't you kind of walk us through how you came up with, and not necessarily how you came up with it, but the refinancing retirement story?
Yeah, so one thing I always try to do is I'm a very conceptual person, so I try to figure out how can I explain this and put it into terms where just anybody that is not even in the financial industry would understand. And so most people during their lifetime have had a mortgage or understand how a mortgage works. And so if you have a mortgage and you have a payment that's X dollars, and rates are favorable or the environment is favorable, and you can either refinance and lower your payment, or sometimes people might refinance, keep their payment the same, and maybe shorten the duration of their loan. Most people, without a doubt, if that opportunity was in front of them, would say, absolutely, there's no reason why I wouldn't refinance and take advantage of shortening my loan or maybe lowering my payment. And all we're doing is we're revisiting people who have contracts that are purpose for guaranteed income and seeing if we can refinance their retirement and get them either a higher payment for the same dollars, or sometimes it's maybe we take and keep the payment the same, and then we free up all this cash so that we can then repurpose that for other needs, whether that's long-term care, life insurance, buying the boat you want, or a retirement home, or a second home, or whatever is important to them. But to me, what we do sometimes is so we have a case study where the original payment was 40,000, we could move them up to 60,000. And sometimes it's implementing both of those, maybe moving that person from 40 to 50,000 and still freeing up some cash to do whatever else they want with it. And Tim made a great point. In most cases, we have a single life and we can add a joint life on there and keep the payment the same, or sometimes even increase that payment. So we're just talking about refinancing your retirement. If we could take the same dollars and get you more income, there's no one that would say, no, I don't want more income, or free up some cash to do something else with.
And Steve, do you find that a lot of people, maybe even clients that you've interacted with through the advisor, do they understand how much the payout has increased because of the change in interest rates? Do they make that correlation, or is that something that we have to kind of explain to the client?
I think, most of the time if they say, hey, my income is going to go from 40 to 60 or 40 to 50 or whatever it might be, I think most times they grasp onto that right away. But just taking the client through the process, and because I had a case where the client came back and said, well, you know what, we don't really need any more income. And it was a significant increase in income. They didn't really want the income. So we implemented the other strategy where we said, well, let's just keep it the same, and then we freed up In that case, it was actually about $280,000, and we repurposed that for legacy for their grandkids, and they were just going to reinvest that in a separate account and repurpose that money for leaving money for the grandkids.
Tim, you talked just this morning about one of the major and costly risk in retirement, which is healthcare. And I know that you're super passionate about it. You feel like we could double down on healthcare and that advisors need to double down. In fact, after your meeting, I was talking with an advisor who's partnering with a CPA, and I asked the question, how many of them are on need a Medicare solution? And dead silence. Well, we really haven't talked about that. And so there's an opportunity for us to fill a gap. But talk about the importance of healthcare in retirement and how much that $280,000 that we just freed up can go to so many different issues.
Steve, I do want to back up for a second. I want to give you credit for the refinance your retirement concepts that we've talked about. It was your idea to share. And I love the way you simplify the message. It makes sense, right? If your mortgage rate is 7 and it goes to 4, guess what happens? Now, the same on refinancing retirement. If interest rates were at 2, 2.5, the treasury rate, and now it's 4, the converse happens. We get better payouts, better rates of return. So I really, it's that simple. And advisors just need to talk about that with their clients, not be embarrassed about what they offered, what they sold, but to really dig into that, because that's what people want. Now, Mike, to your point of healthcare and retirement, I'm passionate about it. And the reason I'm passionate about it is because just about every single one of you that's listening is going to address and have to deal with healthcare with your client. It doesn't matter if it's a long-term care event, a home health care event, a short-term care event, or Medicare or healthcare. All of those are going to be on your clients' minds, and it's more stressful than anything else that they're going to deal with in their life. And so if we're able to, through the work that we are doing with APR, free up assets to solve for that need, I think that to me is the greatest thing that you can do, to say, congratulations, we just found another well, you use the example, $280,000, which is, we're not making up these numbers. These are real. We freed up $280,000 to solve for probably one of the most stressful periods in the life of your clients, husband and wife, or a widower. Take advantage of it. And the reason you do is because you're going to get referred. And the biggest reason is because it's the best and the right thing to do. So yes, I am. I have, I bring a soapbox to just about every presentation I do, because it's passion that to me drives what we get behind as a firm, and hopefully motivates you to want to go out and do more. And I love this phrase that we've come up with. Hey, look, we're on your staff, but not on your payroll. So hire us, put us in the game. Let us help you with these conversations. You do not have to be the expert in any of the products, any of the solutions, any of the technology. You have to be the expert at the relationship and the dynamics of the family that you're serving.
Great segue, because I was going to ask Steve, walk us through the process that you interact with advisors in terms of, I may have a case that I need to get reviewed, turnaround times, those types of things. What do you and Phil do when you're presented with a potential case?
So, like Tim said, it's super simple. I mean, we are the additional person on your staff that doesn't cost you anything. Hopefully, we're gonna actually not cost you anything. We're gonna pay you to be on your staff. We're gonna help you make some sales with your clients and put them in a better position. But it's really a simple conversation. It's more of setting it up with, like I did with the refinance retirement. One thing I do want to add that I kind of missed saying is, don't look at just contracts that have the income is not turned on. sometimes a contract that is already in the income phase, we can improve those as well. And so it's a simple conversation. All we need is the most recent statement, and then a fact finder, which it takes 2 to 3 minutes to fill out. Unless sometimes you say fact finder, people think it takes 20 minutes to fill out. Ours takes about 2 to 3 minutes to fill out. You send that back to your Ash brokerage team. Our annuity performance review team then will turn that around, typically in 24 to 48 hours, depending on how many they have on their desk. And then we will provide a report back with some action steps on going back to that client, setting up that conversation, and helping that client refinance their retirement and get them in a better position for guaranteed income.
So, Steve, you brought up a good point that we've talked about in previous episodes, but the idea of that old contract that's in income right now may have a high income benefit and a lower cash surrender value. Your immediate response is that's a dead asset. And we can't look at that because interest rates are 400 basis points higher than they were 5 to 6 years ago. There are significant increases in joint single payouts. You can no longer consider that a dead asset. The other thing that I want to point out there is that when you do a full review, we did what, Tim? We on the retirement side, we helped 22,500 people or so last year. I cannot remember one case where a compliance officer declined it when the annuity performance review was submitted with the case and we proved agnostically that this is in the right move for the client. And that's a really important thing. And the other thing is the technology behind this. As Steve said, this is super easy, but there's a lot of moving parts behind it. We back all of our information up with Morningstar Intelligence, Wink Database, CanX, all third-party type of information that is well vetted by the industry in order to present an agnostic look based upon what you can sell within your broker dealer and your product shelf. So just a lot of different things moving, but we make it super simple. We're on your staff without being on the payroll, like Tim says. So as we try to wrap it up here and always try to keep it within 15 to 20 minutes, we could go on and talk about this annuity performance review forever. I would encourage anyone listening, call our sales team, ask your retirement income specialist or retirement income consultant to send you our digital solutions room. We update it weekly with a new case study that Steve talked about, and we will alert you when that comes in. It's usually on Tuesday afternoon, and that can actually kind of ring some bells about I may have somebody in my client that looks like this. So I'd encourage you to use that digital solutions room. But first, Steve, any closing comments or any easy thing that you want people to remember?
Yeah, just as you're meeting with clients, ask the question, make sure you're reviewing their old contracts, and it's a super simple process. And the whole goal is to put your client in a better position and refinance and get them some higher income in retirement.
Tim, any last minute parting comments from you?
Hit rewind 15 seconds and listen to what Steve just said.
Very good.
Evaluate your book of business. Do not assume that because your client, and Steve, I'm glad you said this, and we'll land this plane. Even if clients have turned on income, those are the ones that we're seeing the most improvement with. And so don't assume that you cannot help someone just because they've turned on income. So with that, McGee, I'll turn it back over to you for closing remarks.
No, thank you both for being on the show. Appreciate both of your time, effort, and energy to the retirement division. If you like this, make sure that you are liking and subscribing so that you get notification. We try to release these every 2 weeks. And I hope that you stay tuned in 2 weeks because Steve Shankerman's going to stay around And we're going to have an additional conversation about how to position guaranteed income in the next episode. So again, thank you for listening and thank you for your business. And I hope that you're off to a great first quarter in 2026.
This episode of Accumulation to Activation was produced by Ash Brokerage. For more on the most pressing and critical issues facing financial advisors today, be sure to subscribe, leave a review, and share this episode with a colleague. For more resources, visit us at ashbrokerage.com or reach out to our team at 800-589-3000. Let's start a strategic conversation about how you can be more efficient with your retirement income and legacy planning solutions. Insurance product guarantees are subject to the claims paying ability of the issuing insurer. Annuities are insurance contracts and may be subject to fees, surrender charges, caps, spreads, participation rates, and tax implications. Withdrawals are taxable and, if taken prior to age 59 and a half, may be subject to an additional tax. Product availability and features vary by state and carrier. Social Security and tax rules are complex and subject to change. Clients should consult their tax and Social Security advisors. Any modeling or Monte Carlo analysis referenced is based on stated assumptions and are illustrative only. Results vary by client profile, market conditions, and product selection. Past or modeled results are not guarantees of future outcomes.